Hello to all traders and welcome back to another market review brought to you by Orbex. So gold is back in the headlines again after hitting multi-month lows and sinking to the 1940 level. We've seen a little bit of a bounce since the early morning session, but this is a very big dive for the yellow metal after it's sinking quite rapidly away from its 2000 psychological handle. And with improved GDP data in yesterday's session, we're seeing that the American dollar is climbing once again against most of its main competitors in the FX market, but also the dollar index as well is climbing quite significantly. So where does this, where do we go now for gold? A lot of traders are asking, where's the next signal? Are we heading to 1900? That would be quite catastrophic for gold because it has had such a big leap in the last few months, back up to record highs where we've seen it spike above 2000 once again. So the last time we saw these big levels was at the height of the pandemic, the unfortunate invasion of Ukraine, and obviously the banking crisis and the Fed has recently propelled gold up until that particular point as well. So where are we going next? Let's have a look on the daily chart first of all. And what I just want to point out is now that with the assistance of the Ichimoku indicator, we're just seeing now prices really engulfed in this particular level, meaning that it's more looking likely that we're going to keep on heading to the downside in the near term at least. The only respite that we might have is if we get down to the roughly 1925, 1930 handle, we could see a particular bounce there. We could have already seen a slight correction in gold in the last few hours. However, it might not be enough to keep pushing it higher because there's no divergences in sight, giving us the impetus that we will start moving higher in the near term at least. So let's just zoom in on the daily chart just to see the levels, because as I said, the 1940 handle was last reached in the middle of March. We are obviously coming towards the end of May now, so over 2 months, and more significantly to the third quarter as well. So this is not a good start for gold going into the third quarter, but a good start for dollar because the American economy has apparently avoided this recession that it has been looming over its head for the last 6 months. Recession worries have turned to European and China demographics now, so we are seeing what's going to be in store for the next few months as well. So let's go on to the 4-hour chart just to get a little bit more intraday activity going on. So as you can see here, for a lot of analysts, they're saying that we're in a fully fledged bear market now. There's not really many upswings in the market, and as you can see here, we've actually gone lower than the previous low. So this is an indication we will have a slight upside move and then another move to the downside at least. But will we get to 1900 and when we will get there, we'll have to wait and see. The last time this level was hit was obviously a while ago, but if we go right back again, so it was March, so we had obviously that steady incline in March because of the banking crisis in America. So is that going to be over? Is the Fed going to have any more big moves in the market to tell us the direction for gold? Well, for dollar especially, we're just seeing now this grand move to the upside. And as you can see here, moving to the 104 region. Haven't seen this region again since the middle of March when gold was shooting quite higher. And what we're just experiencing now is this V-shaped recovery. So the next target is roughly about, sorry for the squiggly lines, is roughly about the high end of the 105 handle. If prices can get there, then we are expecting some heavy resistance, but possibly another leg higher. But this is not out of the ordinary. As you can see, the dollar did spike up to $114 at one point, and this was at the back end of Q3 in 2022. So it's not really out of the ordinary, out of the question. But as you can see here, very nice V-shaped recovery forming for the dollar, and we'll see how far that's going to go. Obviously, there is a bit of a slowdown on the RSI. If we do get the RSI moving over, then that would form this bearish divergence. So it is looking likely that we will be looking possibly more bearish than bullish if that does come into fruition. On the 4-hour chart as well, we are seeing now more of a gravity of this V-shaped recovery. But how far can we go? Fully fledged bull market, for the dollar. We're just seeing now if we're going to have any more movement to the upside. Obviously, keep an eye on the recent news headlines for the debt ceiling as well. This is really driving the dollar. Good progressive talks apparently happening, so a default won't be happening at the beginning of June, most probably. So thank you very much for joining me. Let me know your comments and thoughts on Telegram, on YouTube. Just to remind you that we have our live webinar, Trading Technicals and Fundamentals, later on today. If you haven't already signed up, then please visit our website or check your emails to make sure that you are not missing out to activate the link and to join me today. So thank you very much, and we'll hopefully speak later. Bye for now.